Yeah, hello everyone. Uh, it's Jason and welcome again to my YouTube channel. Today I'm gonna teach about reversal trades and continuation trades. As I promised it on the previous video, today we're gonna learn about that, right? And the only thing that you should put into your mind is the good trades are the trades that are tuned with the higher time frame trades. For example, now let's start with the continuation trade. The continuation trade can be taken from any time frame, right? And the thing is, you should follow the coordination of time frame. If you don't know about the coordination of time frame, just please check my previous video, right? My last video to be uploaded on my YouTube channel. Then you will see it, right? So, for example, this is the bullish liquidity area created. It can be from the daily. For example, let's imagine this liquidity area has been created from the daily. So, if you have this bullish liquidity area like this, what you should see if you have the bullish liquidity area like this. Sorry, I want to change it to be a color. It is to be, yeah, to be like this. Okay, so if you have this bullish liquidity area from the daily, what you have to see is you have to see the market drop here. You have to see the market drop here and then shift on the H4 as the FTA and take decision based on the H1 and target these highs. Okay, and target this highs. This will be the same. This will be the same. This will be the same as this. If the market create this bullish liquidity area from the daily, what you have to see, sometimes the market can drop all the way down like this. The market can drop like this, right? And then during all the way up, the H4 can create this, we call it the what? The H4 can create a formation like this. So that's not bad if this is the liquidity area from the daily. So what you have to see, because this is the liquidity area from the H4, what you have to see is the market reach here, and then the H1 shift as the FTA, because the time frame says if it's the liquidity area from the H4, the H1 has to shift as the FTA and then take decision based on the 30 minute. And then you can target this highs as the safe target. And if there is no liquidity area remain here, everything is mitigated. I can say, oh, it's consumed. We can target these highs here. So now we can join this move like this, and then we can go up here. All of them are the same moves, right? We can join the moves like this. We can join the moves like this. Okay, so this is about continuation trades. So continuation trades that doesn't care, of course. It doesn't care because if you have the bullish liquidity area, the thing is you have to follow which liquidity area is in play that time. Okay, which liquidity area is in play that time. And sometimes the H4 can do this. I mean, sometimes this will be the daily area of liquidity. That's not bad. So what we can do, the H4 can tap there, the H4 can tap here, and then start going higher like this without creating those changes, maybe the shift and then for you to enter. And then it can tap somewhere there and then start dropping back down. But all the way down before taking out this lows, the H1 shift as the FTA. Then now you can enter on the 30 minute and you can target this high and then you can this before taking up these lows here. And also this may happen. So the price can do whatever it want. The thing is you have to react on the price. When you see something like this, you just react on the price and waiting for. So this will be the form of continuation trades. But the reversal trades could be like this. Some people here, they get messed up and they see coordination is very hard because they want to catch top and bottoms by following the coordination. The coordination most of the time help us to get a low risk entries. It doesn't mean you won't get a loss. The loss is inevitable enemy in trading. But the thing is you will take the low risk trade. So sometimes some people they can see this is the okay, maybe the monthly is bullish. Okay, maybe the monthly is bullish like this. So in order for us to return into this monthly bullish liquidity area, what we should do, for example, the monthly is bullish. Now I want to create something like this. So if the monthly is bullish, for example, we want to see the weekly shift as the FTA and then take decision on the daily and either inside or outside formation based on formation created to go back down like this. Okay, so some people they may see daily, okay, this could be the liquidity area from the monthly. Some people may see daily, they was creating these small breaks like this. They shift here and then they take into here for selling, go back down here. Hey, the market will kill you. The price will take you out all the time. Okay, you may see like the market is weird thing because why? You are trying to do something which is not existing, which is not existing. Because why? Listen to this. Now we want to have the shift from the weekly because now you understand the weekly is stronger than the daily. That's why we combine the weekly as the FTA. So now imagine you do this. The market this goes like this, goes like this. Let's say this is where the weekly has to shift, and the market creates a small shift from the day before before the market before the market going lower and then confirm that shift from the weekly, which is here FTA. Then the day shift to the upside like this, right? So now you know if you have the weekly liquidity area, the daily has to shift here as the FTA. So the market will go to the H4 and then do this, and then you are still right here waiting for a sell. You are doing wrong. You're doing wrong. You're doing wrong. So how do we deal with this? The market can reverse from any time frame. First of all, the reversal can be created from any time frame. I will show you the multiple example from the pair that I trade. I'm always trade two pairs, gold and GU, gold and GU. And if you are listening to me, if you want to see the benefit from the market, the only thing that you should do trades uh no, not a lot of pairs. Just have two pairs, have one pair. Two pair or one pair. That's more than enough. Because the more we stay here, there is a time. I think next video I'll teach trading trading style and risk management. It will help you. So that is my idea from that. I will teach you about that. Of course, it will help you a lot because if you don't have a mindset, then this technical analysis is nothing to you. If you don't have a proper mindset to try it or anything, because I've done the mistake a lot and I'm learning from those mistakes also. Okay, so what you should do during the reversal trades, what you should do, for example, the daily can shift it like this. That's not bad. If the day shifted like this, that's not bad. But now what we could do, we can still believe the market is bullish. Means uh if, for example, let me try to show you here. Let's say uh, this is this. Let's say, for example, you have this from the daily and this. Now let's say the daily has shifted here. The daily has shifted here. So if this is the daily shift, for example, if this is the daily shift, that's not bad. But remember, we are reaching to another daily liquidity area, which is here, bullish one. So what we have to see is the market shift on the H4 as the FTA, and then we enter on the H1 to go up. Okay. But remember, we can take this also as the bearish liquidity area created from the daily. We can take this here from here as the liquidity area created from the daily. So it means if we're gonna see the shift from the H4 again to the downside, now we can take this trade here, and then we can go down like this. We can go down like this. We can have this as the safest target here. And have this as the safe target right here. Okay, right here. This will be the safe target. Yeah. So you can take the entry. This will be the H4 shift, and then take the entry based on the H1 here. Then we go down. So you can take this trade here for going here. And you can take this trade here for going back down and then taking out these lows. So you can take this as the liquidity area from the daily, and this is what should be done. Right? So, or the price can do this because anything is possible. The price can do this. Okay. Uh the price can shift from the day, but can shift, or not to shift, but can create something like this from the day. And then tap here during all the way up, okay? And remember, this is the formation created from the day, like this. And remember what has been created. And remember, you see the price, when the price reached there on the daily, liquidity area, because this will be the liquidity area, of course, and then the H4 shift to the downside. Now you have to take decision based on the H1, and then now you can target these lows here. And if you target these lows, here, you have this lows as the target here. This will be seen as the another formation created from the day. Okay. That stuff is possible, or sometimes the market can be bullish from the day here. But remember, in order for us to turn here, the H4 should shift. So sometimes the H4 can shift. Do we? So now I want to create something like this. Sorry. This is the liquidity area created. Yeah, you see the liquidity area created. And if it's the liquidity area created from the daily, now the H4 can shift it to come down here. But are we bothered about this shift? No, because sometimes the market can shift and do this. Because why? The trend is bullish. So this shift can be a slippage or something. So oh, the inducement, so the price can go up like this. So we don't trust this. And even though it seems like the FTA for the day, because why? Imagine this is the bullish move. The bullish move caused by the maybe the price tapped into the bullish liquidity area from the monthly and the price is going up. This shift cannot tell us anything. Cannot tell us anything. So what we should do, the first thing is if the H4 shifted like this, that's not bad. We want to see when the price reach here, we can take this as the H4 liquidity area created here. We want to see when the price reach here on the H1, because the H1 for this case is the FTA, if this is a good area from the H4, the H1 shift here as the FTA, and then go to the 30, take enter here, and then you can get the power to go down and probably to shift from the daily, and this will be same like okay, we can get the power to shift from the day, for example, in this case here, right? This, and the entry could stay right here. So all of them are possible. Or sometimes I will show you this. Or sometimes the price can do this. Price can all the way down, maybe on the H4, the H4 can create this. All the way down, the H4 can create this liquidity area. So the same thing applies. You have this liquidity area from the H4. When the price reach here, the H1 shifts to the downside as the FTA, then you take the decision here, and then you target these lows here. Okay, you target these lows here, and then maybe sometimes if everything is consumed around these areas, yeah, you can target these lows. But if there is something that you can see is not consumed, you have to target it because you don't know at which magnitude the price is going to react. There's a price can tap here and then can eventually go up. So you can target this unmitigated formation which is right there on the left side. Okay, you should not enter on the left by using this. You can enter here, but you wait the price there. Another thing is sometimes you can sell directly from the day because why? Let's imagine you are just fighting because you're just fighting with nothing because let's say the monthly has the bearish area of liquidity like this. And let's imagine the price reached there and then the weekly shift as the FTA like this. So if the daily reach at this point, of course the day is gonna do this. You will see the daily tap at some point on the daily time frame itself and it started declining. So you have to really know which time frame is in play. That's why I told you you have to trade only one pair or two pair just to have an understanding of that pair. If it is reaching on the higher time frame POI, then you have to know the major move is coming. The major move is coming. So all of that things are possible on reversing. Okay, on the reversal trades are possible. On the I can say what I can say is on the continuation also are possible. That's how we could trade these moves, right? So now I want to show something here. I have multiple examples from gold. Then I will show you how I managed to trade those trades. I will show you like 5 examples. I will start with this current one. Then you understand better because I took the entry here on the current price here, and I will show you another entries. So starting by this here. First of all, if I will go to the weekly or other time frame, now you can see, now you can see this. Um, if I go to the time frame like weekly, you can see we have nothing on the left side on the week, right? We have nothing. So if you have nothing, there's nothing we can deal with. Okay. So we have to look on the daily. On the daily price seems to be bullish, right? So means the liquidity area that was holding the price was coming from the daily because currently we don't have any liquidity area that has been violated from the daily. You don't have any shift, so it means daily is controlling the price. And then if I try to go to the H4, now you can see the H4 has shifted here. But do we trust this, the H4 shift? No, because why? The price the price can tend to go up. So the only thing that I was having this as the H4 liquidity area. If the market is respecting this, then I can try to sell and this can be my target. And then I look carefully, there was nothing between here, so I could say here. And but sometimes this is the secret. Sometimes I just use the Malaysian SNR to know the targets. For example, I came there and I say if the daily is gonna respect that, the only area that can stop this price was they call it this support because there is nothing to stop on the left side. So this support was the target at least. So if I was selling there, I know the gold also for support and resistance from Malaysian. So this is the confluence that you use to target to make the targets because that's how gold goes. Okay. So I say if the price is gonna go low, at least I have to target this area here as the target right there. So from here to here, let me try to add some more colors. Mm, oh, it's too much. At least here, yes. I would say at least when the price reach here, then I can take the move. So this was the H4 liquidity area. So I have to see the shift from the H1. So I came here on the H1. If you see clearly, if you see clearly from the H1, we had the shift as the FTA, which was here around this area. This was the shift from the H1. So it means the price is respecting the H4 liquidity area, so we can even go down. So I just go to the 30 minutes to take entry. For sure, I was having this inside formation created on the 30 minute. So I just use this 30-minute formation that has been created here. And then I put my stop above just a little bit because I just know at least I can target this or this lows here. So I entered direct on this formation here. I was having my stop around this area. I don't care about the pips. I usually set the stop loss according to uh to the risk management that I have. So that's it. I usually trade 1:4. That's usually my target. So I can even target this here because it seems to be like a formation. So 1:4 for me was really enough. So here. Remember to have a realistic targets. Remember to have a realistic target because sometimes it may tend to take you out. That's it. And then the price reached there, of course. But my target was here, and this is how I managed to trade gold. It was a shift inside formation, enter there, then it's go down. Error risk and trade. That's how we trade this moves. I want to show you another trade that you may know. Let me try to find another trade that I took. This will be the continuation trade also. Mm, 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 mm. Okay, I had this good trade here. This trade also is really good. I constructed it on the H4 itself because these days, if I try to go to the daily, if I try to go to I tried to go to the daily, and you see on the daily we had the market was going higher. So there's nothing that the thing is just the only thing that can stop this price, at least from the daily, was this here. And if it is not this, there's nothing else. But the thing is, anyway, this is the target, but I have to construct because the only liquidity area that I see from the daily was this bullshit liquidity area here. So I think the day was controlling the price until I go to the H4, and then I realized also the H4, sorry, the trade was created in here. Sorry, the trade was created in here. So still the H4 here was holding the price because we had this H4 liquidity area, and it seems like this liquidity area was the final liquidity area. So there's no any shift on the H4. So the price is still respecting the H4 liquidity area. So what I did this. I marked out this liquidity area, and then I go to the H1. And remember, I'm doing all this before the market create another liquidity area. So this high will be my target. This came to the H1. On the H1, I just wait for the H1 to shift as the FTA. So you can see the H1 shifted to the upside where here. And then I go to the 30 minute. take my entry. And I go to the 30 minutes, I had this inside formation that has been created around these areas here. But this formation, to be honest, seems to be big. It seems to be big. So I just go to the 5 minutes at least because 30 minutes has 5 minutes also reduce the risk. Then I just go to the 5 minutes. Then I saw something which is here. It was not consumed 100%. You can see it's small wicks. So I was having this area here. But to be safe, I entered long position here, and my stop was below the lows right here. At least to be safe. And then now, because where we can the area that can stop the price, there was nothing. This was the candle news. There was nothing. This was the candle news. So this candle news has nothing. So I just go to the daily and then mark out at least the SNR that can stop this price was right here. The current SNR that may stop this price. So that's it. Mm, yeah, that's it. So let's go to the H1. I started playing this price. Price stopped right there. It is steady for a long time. Trust me. The price started shooting up. And this was the target is 1:4, like this here. So when the target hits, I usually close 90% and I just remain with only 10% when the target hits, which is 1:4. That is my target. So 1:4 was right here. I'll tell you why I'm usually use the 1:4 here. This was my target because there is nothing on the left side. So when the target hits, everything is done. And then I have to target also. You can target the size. Now the 10% remain. You can target the size. If the market will take me out, that's okay. So the price reached there and everything is done. If you observe, I'm just taking the one type of entry over and over again. Now, I want to show you another entry that I took. This entry was formed based on the daily. Then I will show you this entry. It was right here. Mhm. We are having this date formation even though it was not complete. It was not complete. It was the date formation but not complete too much because the packet was supposed to close this highs, but that's not the problem if the coordination will be followed. So we had this date formation here. So what we have to see is the H4 shift as the FTA. So at this time, oh sorry, I think it was this side here. Mm-hmm. So now here, we come to the daily. What do you see here? We had we had because this high we had something like this. I call them the hidden formations like this. I'll teach you the next lesson, or I teach you later on how do we use the hidden formations. But the thing is the condition should be followed. So we had this formation created in here. This is the hidden formation, of course. When you see this long wake right here, it's the formation that created from the daily. But the thing is, it should never take these lows here. So if it's the daily, what I have to see is the H4 shift as the FTA. Because if the H4 will want shift as the FTA, then that could be the problem. Okay, that could be the problem. So the H4 shifted right there. The H4 shifted as the FTA here. So now we know we can go up and take out these highs here. So if the H4 shifted as the FTA, now we know what we should do. We have to go to the H1 and take decision based on the H1. On the H1, you can see we had this formation here that was consumed a little bit, and then we had another formation that has been created here. This was the formation that I used. I marked out these formations here, and then where do I target? This will be my safest target. So I entered long position around these areas, and then my stop was just a little bit low to keep the price long to burst, and this high was my target at least. Now it's got to 1:6, but remember we take something on the 1:4. Okay, so if I let the price to play, The price just came down. Tapped right there. And then finally took the highs right there. Okay, so this was the trade that I took. So the trade. Remember, I'm using the same rules over and over again. You should not change. You should not change. That's it. If something is working for you, it won't work 100% because I can show you the losses too. I can show you the losses too. Let's take out the highs and the issue is done. But remember, around these areas here, yes, around these areas, I was taking everything, 90%, and then I leave the rest here. Okay, I leave the rest here. And then another trade that I took, I want to show you was the reversal trade. This reversal trade, wait, I want to show you even this trade here. This trade also was really nice. How? Uh-huh. The thing that we had this far area for liquidity. Yes, we had this far area for liquidity, if I'm not mistaken. Let me go to the H1. No, 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 no. It was before. It was before. So means it was the area here. This is the bullish liquidity area from the H4. Clean. So what we have to see, we have to see the H1 shift as the FTA. So did the H1 shift as the FTA? If I come here, yes, you can see the H1 shift as the FTA. And then we come to the 30-minute decision. If we come to the 30 minutes, we had this inside formation here, created here. And then you put the stop here. Sometimes you can enter here. The stop where the stop should stay. The stop should stay around these rows, at least to give the price some breath. And where is the safest target? The safe target should be this highs here. Should be this highs here. So around this highs, you're supposed to, yeah, take something because this is the safe target. Even though this side there's nothing to stop the price, at least, yeah, this highs here. So when the price hit 1:4, yes, yeah, that was my target. So you can put there because this cannot stop the price. It was consumed 100%. That's why you see price came all the way here and then call this highs. See, it was consolidating. And the work was done. Even this trade here was a really good trade, of course. It was a really good trade. How you can take it? Uh, of course. Wait, let's wait for find another example. But this was put into your mind. This is your assignment. Go and then backtest this price. This thing happened here. It's the same thing that happened in there. Okay, now I want to show you another reversal trade that I took. The reversal trade was formed around these areas here, and you have to know why do I call them the reversal? Why do I call it the reversal trade? Now you can see the price is in a downtrend like this. Okay, in a downtrend like this, and the last trade that I took was around these areas because the H4 shifted the before taking the lows, the H4 shifted this area as the FTA. Then I took the trade in here, getting this lows, but this time we had this area here. So now it clearly you can see this market was trending to the downside. So the only thing that we had this H4 as the what? We had this H4 formation that has been created there. So what we should see is the H1 shift to the upside as the FTA. So if I play the price a little bit, then you could see the price coming all the way down here. And then what the price do, the price shift to the upside. You can see the price shift to the upside as the FTA. You can see this was the H4 and the price shifted to the upside because above. So I have to go to the 30 minute. On the 30 minute, where can I take the trade? On the 30 minutes, this was here. We zoomed a little bit. The area that we had, the cleanest zone we had was this one here. We have nothing below here. And if I enter here, where is my safe target? The safe target could be here and this eye also, because there's nothing here that can stop the price. Even by no eyes, you don't need to go to the long term front and then find something which is not there. So you can enter there. The stop can stay a little bit lower here to give the price room to breathe. You don't need to have the snipers all the time. And then, yes, remember around 1:4 means around these areas here. I will take 90% because that's what my risk management says. Around these areas here, this is 1:4. And after here, 10% will go up to these areas there. So if I pay the price stopped right there. If I let the price to go, we simply took out those highs. So hopefully you have learned something today. So go and backtest the something that I've taught you. It actually happens over and over again. Over and over again. Over and over again. I can show you what, okay, now let's finish up by this example here. Then now you can understand it better. You can understand it better. Okay. Now what we had, if I just come to the daily, this was a really good trade that made it. Mm, from the daily, even though it was just a little risky one, from the daily, now you can see the daily has shifted to the downside. Are we getting bothered by this shift? No, because the trend is bullish from the daily. You can see. So this small shift cannot tell us the price is going down, but something that may happen. We want to see the H4 shift also to the downside, like the rule said. So you see the H4 shifted to the downside around these areas. And after this shift to the downside, I just go to the H1 and then I look for the formation that we had on the H1. We had this good formation created in here. Okay, good formation that has been created in there. So if this is too big, you can go to the 15-minute or so to check what you can even use. So from the 15-minute, I love to see if there is flip zone like this, then put into your mind the price will tap to the flip zone and the price can tend to go higher. So the stop can stay right there. You should never mind this because you have to adjust your stop loss according to, you have to adjust the lot size according to your stop loss. Okay. So the price tapped right there. So the area where the price tapped in, which is already tapped. And then now, where do you target this times? Okay, you can target again this. The stop should stay a little bit higher to keep the price from to breath. And the 1:4 is around this areas. Yeah. Right, this will be the target. Of course, this lows here. And after taking there, I have to target this lows here. It was a little bit risk because the price was already taken out this lows. So sometimes the price can, yeah, this was a little bit risky. So you should never risk it the way you always risk before. Yeah, the work is done. Up right there, and the work was almost done. So I've shown you a lot of entries taken by the same rules over and over again. You don't see like I'm going against the trend. I'm just following the trend. When the trend change, I just go with the changes created. Go with the changes created. I can even show you the trade. There is another trade that has been created in here. It was the same rules get used. The trade up here, the same rules get used. So that's it. I hope hopefully this video helped you a lot to change your mindset and just to know to just understand which area is functioning, which area is not functioning, but how you could go with the trend. Hopefully, if it helped you a lot, you can comment on that comment section. Okay. And I receive a lot of DMs demanding for mentorship. Of course, this time I don't have. This time I can say I don't have. The mentorship is until the next month. This time I don't have, to be honest. I can say that. Until next month, I think. Okay. All right. Until next time, bye bye.